Good morning and welcome to the Saxo Bank Morning Call. It is Tuesday, January 29th, 2019, and Ole Hansen, I think we've got a lot on our plate this morning. Help me out through all this. We've got a lot to cover today, and we're going to look first at what I think was a key news item yesterday, this Nvidia sales warning on Q4. We've got a chart here, the NASDAQ 100, the minus 16% on the Nvidia stock, only feeding it through a bit to tech weakness here. But just for perspective, I mean, we're looking at a company that was, even through the big crypto crash, only reported a modest downturn in quarter-on-quarter revenues. That Q3 revenue was in around 3.2 billion, a little bit less than that. And we're talking about Q4 that's coming in at 2.2 billion. This was a growth stock, you know, plus 30% year-on-year, plus 40% year-on-year, and now we're down to minus 33% quarter-on-quarter.
It is phenomenal, and I think it just shows that this China they're blaming on China once again. Showed that slowdown in China. So from microchips to big machinery, you can see that Caterpillar was followed suit yesterday.
Got the next chart there on Caterpillar. That's right, and that's about digging things out of the ground.
That is digging things out of the ground. That is heavy machineries, and again they was the biggest profit miss in a decade, and once again blaming China. So we are seeing quite a sharp slowdown, especially over the last couple of months of the year in China. So
especially you're talking about a company like Caterpillar. It's sort of linked to the whole story around fixed asset investment, building things in China, infrastructure development, etc. And then on the tech side, a lot of that warning from Nvidia was about consumer behavior, and especially the high-end GPUs for those high-end computers, as well as apparently some data center news. Any case, I think we're just seeing a pattern here of some pretty heavy misses. We've got an earnings overview here. Not that I expect you to read this chart, but we have a great rundown of the earnings coming up from our colleague Peter Garnery out on home.saxo. The link there is at the bottom of the screen, all the upcoming earnings. It's a really critical week here. We've got Facebook up tomorrow, Amazon the day after. Apple is actually up after the close today. And you see on the right the earnings still growing year on year, but in terms of 12-month trailing, but the rise there has been falling a bit this quarter. And yet we're seeing some risk off, but we're not seeing a huge panic yet. And the reason I think behind that is the story we're building that the Fed, especially after that Friday story from the Wall Street Journal, which really wasn't based on any new information, it was just sort of a roundup of previous Fed statements, really gunning for, really expecting at tomorrow's FOMC that we're about to see the Fed do an about face and really continue to touch on the dovish notes, potentially revisiting quantitative tightening. I think the instrument that captures that the most is gold, Mr. Hans. So we have gold, blasting through 1,300 on Friday, and it's continued to be strong this week. That
is correct. It has been in a holding pattern for the past few weeks, but that news on Friday really helped to break it higher. And now 1307, 1325, the next few levels to look out for. But clearly, yeah, it's building up for. We need to see a dovish reaction tomorrow. But it's also spilling into this whole growth and worries. It's spilling into some of the others, and we're going to take a look at oil a bit later.
But on the commodity side, we'll talk about oil later. Yeah. But we're just talking about metals before the broadcast here. It's not like you're seeing a big, Caterpillar down, but you're not seeing a big impact on industrial linked.
No, and I think again, if you look at something like copper, it's got a reasonably good story in terms of supply and demand in 2019. But again, I think it is the belief that central banks will once again come to the rescue that is providing some underlying support for the prices at this stage. So clearly a critical 24 hours ahead of us.
Yeah, and another one of these data points suggesting we've really hit a speed bump and have gone over the edge of something over the last few months. The Australian NAB survey, this is one of these business confidence surveys out. I've got a chart here, the blue line actually showing the current conditions. I've put it on a different axis, I think on the right axis here, just to highlight the size of the drop. This, I think, I'm not sure if it's unprecedented, but it's a very large drop from something like 12 to 2 or 11 to 2. Month on month, and we're talking about an index that just about a year ago was at the highs in its history. So conditions deteriorating at an unprecedented rate, and of course specifically Australia, we're also worried about the housing market, their housing prices coming down, banks tightening lending standards. It's one of these, what is one commentator called a doom loop in terms of a credit crunch for housing there. And Ole, one of the commodities that is responding to this shift in sentiment is oil. Quickly yesterday, we saw the $2 drop or so in the major oil benchmarks.
Yeah, and yesterday was a crazy day in oil markets because first of all we had we continue to see this very high correlation to stock markets and i.e. to the growth outlook. So basically, right now I think that's probably the main driver for oil. So any movement in the stocks will have an impact on oil. And as you said, John, that's the reason why we had this big sell-off yesterday.
And just on the Venezuelan color there, we had this crazy situation where Bolton, the U.S. advisor Bolton, was out with a yellow legal pad on which was written 5,000 troops to Colombia. I don't know if this was a sort of a propaganda message or a message, sending a message, or if it was really something he was considering, but that adding color to the situation there. Now, on to plenty going on otherwise, but we also have a big day for Brexit. We have this vote today in Parliament, and it's not just a vote, it is a number of votes. All of these so-called amendments addressing everything from Theresa May's approach from here and negotiating further with the EU, together with attempts by Parliament to take increasing control and to avoid things like a no-deal cliff edge Brexit on March 29th. If we look at a chart here, we can see where euro sterling, how strongly sterling has come back versus the single currency towards that range low since all the way back into, well back into 2017, around 86. We've bounced a little bit, but we're still, we're actually quite aggressively gunning for positive Brexit news, at least if positive is more delay and more of the unknown, the sense that at least we're going to avoid something chaotic on March 29th. And that takes us into our calendar. Look out for that. There's at 1 o'clock GMT, 1 o'clock Standard British Time as well today. We have this selection of which amendments will be voted on. And again, the two key ones are the ones geared towards avoiding that cliff edge, and then others that might show that there's enough support from May to take an approach and impress the EU that there is still goodwill for something that resembles her original deal, as long as they can get this knotty Irish backstop issue sorted. And then the actual voting on each individual amendment does not start until 7 o'clock this evening. And considering how many there are, I've lost count, is it 14 or 15? That could take quite some time. Also look for the January consumer confidence, maybe a little bit on whether this some of the data we've been seeing in the government shutdown, how it's impacted consumer confidence, and a very important Q4 CPI out of Australia. Interestingly, again, we've highlighted the market theme here, which is that the market is really gunning for a change, a turnaround in the FOMC. We've got all this negative news linked to China. We've got a terrible Australian confidence survey, and yet Australian dollar versus the US dollar essentially unchanged. This just shows you the degree to which the market is looking for the Fed to deliver. And if it does, fine, but how much is priced in? And if it doesn't deliver, I think look out below on risk sentiment, by a number of measures. And then as a reminder, we haven't addressed this issue, but big headlines on Huawei. We've got this Huawei situation where this it's not just about the CFO and accusations of Iran sanctions. It's also about a more comprehensive accusation that Huawei is involved in industrial espionage. A number of official things filed against Huawei here, just as the main trade negotiator from China is scheduled to visit tomorrow. You wonder how they can really put together a deal.
Yeah, talking about timing.
The timing couldn't be worse.
No, and as I mentioned yesterday, I think the best the market can hope for at this stage is they agree to continue to talk. So any solution, any major breakthrough, I think is probably starting to get a little bit get reduced. And I think that's also the reason why we see this additional weakness in the stock markets, because it is raising the continued concerns about growth.
And then back to our calendar overview here, we've got as well key U.S. data and obviously the FOMC. We've been talking about that all day today. Tomorrow evening, the FOMC, plus the press conference. Remember, we have press conferences at every FOMC meeting from now on. First Q4 GDP estimate, and then at the tail end of the week, the U.S. jobs report and ISM manufacturing. So plenty on our plate for today. I'm not sure we get the full reactions today or even tomorrow, because it's I think a lot of this is about the FOMC and what we see there, and then the spillover into the end of the week, Thursday and Friday. So an action-packed week ahead. Stay on your toes. Be careful out there, and we'll be back tomorrow with the Saxo Bank Morning Call.